The Altria Group, ticker symbol MO, just raised its quarterly dividend by 4.3% to 98 cents per share. This will put the forward-looking annual dividend at $3.92, which at current prices gives the stock over a 9% dividend yield. That means you get paid $9 in annual dividends for every $100 invested. This will only continue to increase too. According to Altria's latest press release, the increase is consistent with their new dividend goal that targets mid-single digits dividend per share growth annually. This marks the 58th dividend increase in the past 54 years. Altria has shown to be a reliable dividend grower. In my opinion, the current low valuation makes it a bargain in today's market. That is why I have made it the third largest holding in my dividend growth stock portfolio. Since this news just broke, my research tool has not yet fully reflected the change. However, the increase will put my Altria annual dividend income at $1,451. That is over a $59 increase from prior projections. This level of dividend will be a compounding machine. At current prices, that could purchase over 33 more Altria shares over the next year from dividends alone. Now I know what some of you may be thinking, but Zach, that dividend is unsustainable. The yield is too high. The payout ratio is over 100%. There are likely people who already commented those exact things on this video. Let's address those concerns. First, dividend yield has absolutely nothing to do with a company's ability to pay that dividend. It is simply a calculation of the annual dividend divided by the share price. So the entire reason why the yield is high right now is because the share price is low. By itself, dividend yield says nothing about the company's ability to pay a dividend. That said, a low valuation is often a sign that the market views the company as weak and that a dividend cut may be likely. However, the market is often wrong about this. It's times like these that allowed me to pick up ExxonMobil stock at an 8.9% yield on cost. In my opinion, the risk of an Altria dividend cut is extremely low. Second, let's look at that payout ratio. This metric is traditionally calculated based on net income. However, I have long shared that I think that metric is flawed. Net income is based on GAAP accounting, which includes non-cash expenses like gains and losses on investments. Based on net income payout ratio, Altria's dividend has been unsustainable since 2019. Why? In 2018, Altria made a massive $13 billion minority investment in Juul. Over the following years, they would write down the value of that investment to near zero. This pushed net income down dramatically. In hindsight, the Juul investment was obviously a disaster. It destroyed shareholder value. However, it had absolutely nothing to do with the sustainability of a dividend payment. That is all about the cash actually being generated. For years now, people thought Altria's dividend was toast. Every time I bring the company up, I get these comments. Yet they continue to grow dividends year after year. So what metric actually matters? Payout ratio based on free cash flow is the best measure of dividend sustainability. During that same period, this has shown the payout ratio to be around 77 to 82%. For a mature company like Altria, who historically gives nearly all their cash to shareholders, this is more than sustainable. Altria has not grown its dividend at an unsustainable rate. It's in line with the strength of free cash flow. Sadly, many do not realize this fact. Investors only look at payout ratio based on net income. That's why on my stock research tool, dividenddata.com, I specifically included the payout ratio calculation based on free cash flow. This puts us ahead of many other investors. Luckily, Altria is now fully divested from Juul and has no more related investment losses to incur. So the net income will likely start climbing over the next few years. Soon, net income payout ratio will show sustainability and more dividend-focused investors will feel comfortable piling into the stock. By then, the price will likely be much higher and your yield will be lower. I've been buying Altria stock heavily this year. Last month, I bought another $1,000 worth, which I discuss in my latest portfolio update video. If you found this information valuable, leave a like and subscribe. You can sign up for dividenddata.com to track your portfolio and research stocks just like me. There you will gain access to the exact tool I used throughout the video. If the software helps you identify just one slightly better stock, then it pays for itself. Thanks for watching.